Hey guys, how you doing? First live stream for the channel. See if it works. It is Wednesday. So you're watching this and it's doesn't say live at the bottom. You're watching rerun. Doesn't make it less cool. Thumbs it up, comment. Live chat won't work for you. We're gonna be streaming the Carl Hagberg AMA with atobitt. Yeah, basically this stemmed from a tweet. Well, for me it did. They were planning on this AMA, but let me pull up the tweet here, which is crazy. So this tweet heard around the world. What's up, MD? Yeah, so there was different DD into this, and I immediately started looking at Carlsberg and was like, what's going on? I think that they literally are pointing to this guy, and because he kind of, I don't know exactly what he does, I'm sure he'll tell us, but he basically will facilitate the share counting or whatever. And the fact that GameStop mentioned this, more or less, I mean, it's pretty obvious. We saw the little GS on the badge, so we know it's an edited picture. And the fact that they didn't edit out this stuff is pretty peculiar. So, yep, that's why we're here. I want to see what's going on with that. I did see the Moas tweet today. That is insane. Really insane. I need to share this. Share it. There. I'm accidentally going to start playing like Dr. Disrespect in the background, I think. There's atobitt.
Hello. Welcome. I believe this is our third live stream Super
Up
Stomp
Juice
AMA,
Box, up Ivan.
and we are so excited. I am excited. I'm stoked. I know he's probably very excited as well. I'm gonna let him tell you about it. We have Carl Hagberg, who was referred to multiple times through Dr. T's book. We have him joining us here today. He's had nearly 50 years of hands-on experience. I pulled this from one of his comment letters to the SEC in 2019. He's got 50 years of hands-on experience
I don't even know how to share
as a
this.
manager of a transfer agency, proxy distribution, tabulation, solicitation, and proxy adjudication services. He's also served as an inspector on elections at literally
I saw
hundreds
their
and
Moas
hundreds
tweet, guys. I
of
retweeted
shareholder
it.
meetings, including hundreds of proxy contests and numerous other situations. Many of these situations resulted in differences of less than 1% between the approvals and the denials. So we're talking very close margins. His integrity cannot be questioned. Or his integrity is rock solid, I should say. So over the past 25 years, since 1993, Carl has built and managed a team that now consists of approximately 50 experts, expert inspectors of elections who collectively have acted at well over 20,000 shareholder meetings. So we're talking about Suzanne Trimbath, Dr. Trimbath's number one go-to guy here when it came to shareholder rights and corporate governance. So he has agreed to take time out of the day and talk with us about all of his experience, as much as we can cram into a 40-minute session, and explain how this is going on today. And
someone already linked it in the Discord media. I know they directly reference it. It's insane. And if you notice on that, I'm gonna go over in my video. Those tweets were from a phone. They weren't from the normal, basically, platform they use to send out tweets.
Don't recall anyone ever describing me as a retail shareholder rights expert, but you know what? I think that's probably, or advocate. I guess I've been advocating for retail investors for 60 plus years, and I'm still trying to do it. I'm a great believer in the power of individual investors. I have to say I'm a pretty good example of someone who's been successful at investing his own money, and so I wish more and more people would pay attention to us. So maybe we can get that going.
Hagberg's
I think
flexing.
we're kind of preaching the same song there, and that's what we're aiming to do. I believe very much in this movement. Just the fact that we've been able to kind of start documenting this stuff for the past 5-6 months, and then put it together into a community that is eager to get more information has been incredible. I can't remember the last time somebody was interested this much in something finance related or audit related. It's unreal. So you are very much appreciated, and we appreciate you coming here and giving your background on that. So if you want to go ahead and take,
Can you guys share this on Twitter and the Discord? I don't know how to get the link to this live stream right now.
career, kind of walk through the timeline, give us a table of where this all started.
That'd be great. Interestingly enough, I think if we follow along my career, and my experience in shareholder voting and shareholders being denied votes or being somehow done out of their voting rights, and the whole story of short selling and of naked short selling, especially, and how that deprives people of. Sometimes it deprives them of their whole investment. And so I'll kind of take you along my experiences along the way. So let me start way back in the beginning. I started in this industry when I was 16. I was a college dropout, and I eventually got my master's and my BA and my master's, but all paid for by my employer, which was nice. But I was too young for college, so off I went to the stock transfer department of Manufacturers Trust Company. It was before they merged even with the Hanover Bank. And we were a transfer agent and we were a trust company. And so I was in a unit that was in charge of keeping the books for publicly traded companies, both their stocks and their bonds. And we were in those days, virtually all of the major transfer
Ivan, that's
agents
crazy.
were trust companies. And there was a reason behind that, because there had been a lot of scandalous and ruinous things that had been done when companies were left to keep their own books. Okay, and so the first rule of being a transfer agent was, well, the first rule of being in a trust division was the customer came first, and we owed our duty first and foremost to our customers, who were public companies and their stockholders. But the second rule was the debits and the credits always had to be equal, because in the bad old days, of about half of the 20th century, when we had the robber barons, when they needed some extra money, they would print off some new stock certificates and sell them into the market. But instead of putting the money into the company, they would keep it for themselves, which is why they were called the robber barons. And so finally, the SEC was formed and said, we have to stop doing this, and we have to make sure that the debits equal the credits, unless you made a public offering, told people what you were selling and how much you wanted to get for it, and then made sure that the money was plowed back into the enterprise itself. So that's what we did as a trust company. And in those days, too, 70% of all shares in U.S. companies were owned by individual investors. Most of them were rich, by the way. It wasn't like a mass democracy, but suddenly share ownership got democratized somewhere in about the late 50s, early 60s. Merrill Lynch came and they had a big campaign, Own Your Share in America. And millions of people took up this idea and started to buy shares in American companies and started to do very well, because as we know, when there are lots of eager buyers, that makes prices go up. So everyone started to do quite well. And then around 1958 or 59, we had what was called the paperwork crisis, okay? And the stock exchanges had to shut down early. They closed every Wednesday, when normally they would have been open, because they couldn't keep up with all the paperwork. In those days, there were no computers, okay? They didn't even have handheld calculators until about the late 70s or so. So anyway, we were working round the clock, mandatory overtime, working Saturdays, Sundays to try to keep up with the paperwork. A number of brokerage firms failed because they couldn't balance their books, and they couldn't keep track of the money and they couldn't collect money that was due them. So it was a big mess. And then, so in the next little phase of my career, I was present at the birth of Depository Trust Company. I had been sort of seconded over by my company to what was called BASIC, the Banking and Securities Industry Committee. And Walter Wriston was there, and the chairman of J.P. Morgan Chase and of Bankers Trust and of the stock exchanges, because they realized if they couldn't get control of this paperwork mess, the Fed would take them over the way they run the market for Treasury securities, and so they'd be put out of a very profitable business. And so they just got religion, and they said, we got to straighten this thing out. And we realized that we were the leg men, 5 other colleagues of mine and we were the leg men who would go and take surveys and talk to people and try to work on solutions, and then write position papers and argue them out. And the banks and brokers, of course, they basically hated each other, and they didn't really want to do business with each other, but they had to. So that was that. And pretty quickly, within a matter of 2 years, the paperwork crisis got solved. The volumes were still high, but by having a securities depository, and then computers, which were brand new, they enabled people to cope with with all of this paperwork and substitute bookkeeping, accounting entries for paper. And so it was quite a success. But throughout this whole time, I had always been involved in shareholder meetings. And I started going to shareholder meetings I think it was 16 or 17 when I started, because I knew long division. Since they had no handheld calculators, and they had some mechanical ones that weighed about 80 pounds, and made a lot of noise, interrupted the meeting. But since I could do long division, they let me come. And so I've been going to shareholder meetings since I was a kid. And you see the good, bad, and the ugly, okay? And one of my greatest lessons was, when you saw management that was really, really good, consider investing. When you see management, and believe me, I saw plenty where you could see that the CEO was a stinker, that he wasn't nice to his staff, that the staff didn't really like him. If you had that stock, sell it quickly. But anyway, let's keep going on.
Yeah, that's a really good point when it comes to exactly how the issue is available, like the amount of people that are able to own shares and have influence over a company through this shareholder and through the lending of shares and buying of shares. The prevalence of that
Right.
speaks volumes to this. So getting that direct experience is awesome.
Yeah. Well, guess what? There had always been some short sellers. As long as I can remember, there had been short sellers, and most of them were opportunists, and they were literally vulture capitalists. They would move in on companies that were sort of weak and then try to drive them down to zero, so they could sell while there was still some life in them, and then buy them back, or not even have to buy them back. And so there was always some of this, but it was never a major thing until sometime in the 90s. And shortly after I left the bank, I left the Manny Hanny merged with the Comical Bank, also known as Chemical Bank. And
hey guys, thanks for joining. Wanted to interject here real quick. I'm streaming this on Super Stonks YouTube. You guys can give them a sub up too. This is user atobitt. He's done the crazy DD on Reddit. He's done The Big Short, House of Cards, all the crazy DD that I pick up like 50% of, and the rest I just trust. He's done different Ask Me Anything ones. He did one with that girl, was the author. But this guy, I believe from what I've read, he's working for, Carl Hagberg's working for GameStop in their voter, basically their voter counting and making sure everything's legit. So he will have a big role, and I could be wrong on that. Feel free to correct me, but that's kind of what I understand. And the fact that GameStop tweeted Carlsberg beer, and this guy's name's Carl Hagberg. Yeah, they didn't take it out of their picture, which is to me, that's confirmation bias for sure.
We had our shareholder meeting, and we have 1 million shares outstanding, and we got votes of 1.5 million shares. What is going on? Well, what indeed? And it was because of guess what? You don't even have to have naked short selling. It was because of short selling. And I'll try to explain to you in very simple terms how this actually happens, that you have a meeting and there are 50% more votes than there are shares outstanding. And if you subtract the ones that are held by the management and by long-term mutual funds, it's
Sure.
really 3 times the number of shares that are held by real people. And so
It's what we're referring to as a float.
yeah, I'm sorry. That's
The
known as a
float.
float. That's
The
right.
float. Right.
And so we were trying to get to the bottom of this, and we were trying to figure out, well, how do you stop this? But more important for the given meeting, how do you reconcile this? Well, the fact of the matter is, even when you're not naked, when you have borrowed the shares and say, okay, I've set some shares aside, the borrower, he keeps his vote. The lender, I should say, he keeps his vote. He's still the owner. Okay, he's only lent them like I'd lend you a shovel. I'm still the owner, and I still get my voting rights. Meanwhile, as long as if the short seller actually sells, well, the law of economics is you cannot have a buyer or you cannot have a seller without a buyer. Okay, let's look at it that way. So the seller sells, the buyer also, he actually gets ownership too on another set of books. And so what has happened, unless you actually, well, you say, all right, I'm going to repay you the loan, where you now have to go to the market to buy the shares and close the deal, you've got what are known as phantom shares. Okay. So when you have an excess of sellers, as we've seen, I've certainly seen this in GameStop, and you have a finite universe of buyers. The debits don't equal the credits anymore. Okay, sometimes the debits are 2.5 or 3 times, or the credits are 2.5. The votes are 2.5 or 3 times more than the shares that are officially outstanding. And this is a very bad thing. And sometimes people are doing this quite often. They're doing this with malice aforethought. They're looking to drive the company down to zero, where they can sell at $50 and they drive the stock down to $1 or $2. Because what they've done, when you have unfettered securities lending, okay, and people can just keep lending to you, and you can keep doing more deals and sending more shares to buyers, you've diluted the voting power, and you've diluted the apparent liquidity for the stock. Because what you have infinite liquidity. Okay, you could just keep borrowing more, and you can borrow against what you borrowed, and so that's how you get.
I'm just going to kind of drill that home there, because that is the exact thing that we're seeing right now. The situation where the attempt, and what we'll talk about a little bit when we get more to the meat and potatoes, is for a company to be able to short sell, or for an institution to be able to short sell a company into oblivion, and trigger this kind of criticism or unfavorable position amongst retail owners, to then abandon their position, take the loss, to where these eventually get either they're just completely closed out, or so they don't have that obligation like they do now, where you have so many shareholders that are still holding through all of these time periods, and it's just drying up the volume and the liquidity that is being traded daily right now.
Right. And so around that time, when this was so clearly out of control, I have to hand it to the then CEO of Overstock.com. And that's how I met Dr. T, and how I met Wes Christian, who'll be on, I think, next week, who's a prominent lawyer, and a highly successful lawyer in this field. We were all outraged, and it's like, wait a minute, how can this possibly be going on? And by the way, there's another element here too, is that short sellers, part of what you want to do, sometimes they actually have this belief that the company is just a bag of feathers, you know what I mean? But sometimes they just exercise their First Amendment rights and spread rumors. And then when you see the stock prices go down, the rumors seem to be true, and people act as if they are true, and that's how stocks get to zero. So Overstock and Wes, they really were. I don't know what's the right thing. It was, let's just say, it was an important inflection point to say, this can't go on here. This is just not right. It's not just. It's not legal. It's not ethical. And people are being many companies. I personally knew many companies that folded, not just because their share price dropped, okay, but when it dropped, they couldn't borrow any money, and then they certainly couldn't sell any more stock, and their credit rating was ruined. And before you know it, good businesses literally had to fold. They just went bankrupt because they couldn't fund their businesses anymore. So the SEC started to pay a little bit of attention. But I must tell you, this is back in 2000, in the early 2000s, mid 2000s. And from that time till now, they have a terrible, terrible, terrible record here. Okay. So let's see. They did pass a regulation, Reg SHO, and it actually put a band aid over things. And then the market simmered down a little bit anyway, I think mainly for other reasons, but they put this band aid over it and it kind of quieted down for a bit, okay? Then lo and behold came the financial crash of 2008, 2009, when we saw short sellers again reaping tremendous profits. And there, guess what? There were instances where many of these firms were destined for failure, but they were being pushed down the drain twice as fast by everyone giving up on them and selling short. And so the SEC kind of woke up again and said, oh, maybe we need to look again. I have this little thing, it'll take maybe only a minute to read it. So in 2009, they published this big, thick thing here, and it was a report of the Office of Inspector General, of the Office of Audits of the SEC. And so they published this thick volume, and so here's what it said in the middle. And they made 11 recommendations, by the way. So toward the middle, it says, as we have stated on several prior occasions, which is an understatement, okay, we are concerned about the negative effect that fails to deliver may have on markets and shareholders. In addition, issuers and investors have repeatedly expressed concerns about fails to deliver in connection with manipulative, quote, naked, unquote, short selling. To the extent that fails to deliver might be part of manipulative, naked short selling, which could be used as a tool to drive down a company's stock price, such fails to deliver may undermine the confidence of investors. This, by the way, is the understatement of the year. Unwarranted reputational damage caused by fails to deliver might have an adverse impact on the security's price. Might have. Don't you read the newspapers? Well, anyway, so that's what they put out. So then they included 11 recommendations, okay, for the SEC to consider. And basically, it was to try to detect things early, get complaints early. They were mainly ignoring them, and then follow up on the complaints. Well, lo and behold, after all of this, only one of the 11 recommendations was adopted. And almost all, over the next few years, almost all of the temporary regulations they had put in effect around the time of the financial crisis, they all lapsed too. And Dr. T, who saw this with her own eyes, she saw the effect. What was happening in the business world was businesses were adopting new audit standards, and they called them risk-based standards. And it was, you judged risk by the dollar amount that's outstanding. Well, that's not really a bad idea. But when stocks, as Dr. T said, when the stocks keep falling, they're like problem 1 million on your list of problems. You decide which problems need attention by the size of the outstanding share value, and so they weren't cutting the mustard, and no one was paying any attention. So lo and behold, we went along until the latest round that we're seeing now, where GameStop and there were probably 3-4 other companies where people were selling shares, and there were what I call phantom shares outstanding and phantom votes, except those phantom votes were real votes that if you were lucky enough to get your vote cast, okay, and so that's it continued along until pretty recently. So and actually through the present. So let's see what's wrong with naked short selling. I hope I kind of made this clear, that they create an economic dislocation, to put it kindly, and they basically, by providing unlimited liquidity, they basically take the most basic law of supply and demand, and they throw it out the window, okay? Because now suddenly supply of shares is unlimited and demand, of course, is kind of sketchy, especially if you're spreading rumors that might be kind of sketchy too. So that is the biggest problem that there is with this, and the phantom shares themselves. Everyone kind of knows, you don't have, you go to the supermarket, you don't have to count the carrots and the apples to know what's in demand and what's not, and what looks like good product and what's not. But it distorts when you have this many more shares floating out there. It distorts the market. The other thing is, let's see, let me turn my page here and get control of myself. Well, this is basically it. Until the shares, the trade is basically settled by delivering a security so that that can be canceled, so that the debits equal the credits. You're going to have this continue. Okay. Now let's just see. And then, as I said, both the lender and the buyer end up having voting rights. And so there's a couple problems. One is no one knows this most of the time unless their custodial bank or broker votes over 100%. And most of the time, no one ever goes over 100. In a good year, 70% of all the shares, maybe 80% will be voted. 20% will never get voted. So unless you go over that 100% number at a particular bank or a particular broker, no one is ever the wiser, okay, that more of these votes have been cast. There was a famous incident. It was one of the most contested mergers of all times. It was the HP Compact thing. And institutional investors who were dead set against this merger, they thought it was a horrible deal, which I believe it turned out to be, discovered that because they had lent their shares, their vote didn't count. And in fact, the people who borrowed the shares, their vote carried the day. And so it wasn't economically right, it wasn't morally right, but that's what was happening, okay? And then, so sometimes, of course, they have to somehow come up with the right numbers. And so they go back to the banks and brokers and say, well, look, you voted a million and you only have 500,000. Please set us straight. And so this reconciliation takes place in a dark room somewhere. No one ever explains how they did it. They're not obliged to explain, but somehow in the end, it comes right. Then there's another really seamy side, and this makes me angry. And how am I doing on time? Am I doing okay?
So we've
Yeah.
got about 10 minutes. I'm loving the information that you're throwing out. I do want to kind of tie some of this into some of the things that we're talking about here. I know I can sit here and I can listen to what you're saying all day, but just finding that common ground to where we understand like this position, this is happening, right? You're explaining that this is happening, and how we're leading into today, where you and I both talked on the phone last week talking about that current short position in GameStop having, 140% flow, just as being mathematically impossible to kind of escape from that.
Exactly right. And that the reconciliation takes place unbeknownst or unscrutinized by any regulatory authority or anybody at all. Okay. And then comes the last part, and this should be close to the hearts of GameStop owners. Okay. And that is that institutional investors, by the way, big pension funds and big mutual funds, they make monster money. They make enormous amounts of money by lending shares, okay, to people who want to sell short, okay? And so if I'm a broker, for example, and let's say I have a brokerage account, and if I have signed a margin agreement, if I've signed to allow to have a margin account, okay, they can lend my shares to anybody, make money, okay. Unbeknownst to me, I lose my vote because the disclosure is really very, very poor, okay? And I hear that some GameStop owners are finding, where's my proxy? Where's my annual report? No, they got canceled out because they happen to have a margin account, regardless of the fact that A, they may not have had a penny in margin loans, okay? But they signed an agreement that allows the bank or broker to vote to lend their shares, okay? And they don't get a penny of compensation. So the agent is making millions and millions of dollars. Individual investors who are in the dark about this, they're not even discovering. Most times you don't know you didn't get a vote. Now with GameStop, because the imbalance was so big, people are asking, "Where's my vote?" And they're told, "Well, you have a margin account. You don't get a vote, or no, you missed the day. You missed the magic day. You don't get a vote." And so that is one of the worst. And now I have my very last of the worst. And I was very happy to see that the interim SEC chairwoman, Allison Heron, what was her last name? Oh, God help me. But anyway, she was the Allison Heron Lee. Okay, she was the interim, and she's still an SEC commissioner. And while Gensler hadn't been confirmed yet, she instructed the staff to look into mutual fund voting, because mutual funds are often not voting, or they're giving the vote to somebody who's voting against their very own positions, the positions that they uphold. And mutual funds, many of them are deciding that shareholder votes do indeed have value, and that whether they're economic proposals or social proposals or environmental proposals, your vote on these proposals has value of its own. And companies who are good citizens create more value than companies who are scoundrels. So Allison Aaron Lee, God bless her, she said, we need to study, we need greater disclosure as to what mutual funds are doing with their shares. Are they lending them to third parties who are voting in many cases against the positions that they uphold? By the way, these mutual funds are fiduciaries, as I was back in my days as a banker. And our duty is to our client, to the shareholder, okay, and not to the almighty dollar. So those are the issues that I think are in front of us now, and I'm really pleased to see so many GameStop owners stepping up and asking hard questions. And I'm sure that when they're, based on the numbers that I've been hearing, and actually they're published, it's not a mystery, that come their meeting, there's going to be significant overvoting unless people spend hours and hours ahead of time in their dark offices trying to reconcile this before the day of the meeting. So that's where we come out there.
Yeah. Wow. So I think I do have a little bit of echo going in your background there. So it's every time we're trying to cut in front of each other, we're getting some echo. But my gosh, I mean, for an overview of that level, I mean, wow. Okay, so I have a lot that I want to address with you. One of the biggest things I think is like the numbers that you were talking about there, the things that are evidence of naked short selling. How Dr. T was mentioning in her AMA, where one of these things that you can kind of see bubble up is evidence of a place where you can see evidence of naked short selling is in the shareholder meeting, which you have talked about. I mean, obviously this is a pervasive issue. So I'd like to kind of start walking through where we would kind of get into those numbers that I sent to you for review, and then talk about some of the effects of this upcoming vote and what the significance of potentially being the first company in a very long time, if not ever, to have this vote where you're seeing potentially hundreds of percentages above what's possible. And on that note, because we have about 8 minutes, are you okay going just a little bit longer? Okay, good. That takes That takes a lot. I appreciate everything that you just talked about. I really do, and I don't want to have to cut off the rest of this because I have people that we need to. People are wanting to know, institutional or international shareholders. Like we've got questions for them. People that are having issues finding their control numbers. I know Dr. T was stressing the importance of that for being able to get their voice out, so we can address them. But so yeah, if you don't mind, if that would be
Yeah.
great, if we could kind of walk into some more of that, have a couple extra minutes.
Yep.
Okay, excellent. So let's do that. I mean, the point that I was kind of looking upon your 2019 comment letter to the SEC, where you're talking about these implications and how pervasive this issue is, and the one thing that kept standing out to me was this concept of overvoting, which you've just described. Not just through naked short selling, but through short selling. And so that has kind of led up to this position where we're at today. We have the run up to 2019, and with you talking about the narrative that people are able to spin through media and be able to say GameStop's the next blockbuster, so to speak. So there was this huge incentive downward pressure on GameStop for years. I mean, even in 2019, this was a heavily shorted stock, and a lot of people caught on to that. And so the run up in 2020, in the beginning of 2021, when we got into January, was where we started to see this tremendous share volume coming out. And the biggest red flag, I think, for most people in this sub was this Reddit forum was the total reported shares outstanding at the end of 2020, including restricted shares, those internal shares that are being held, was about 70 million. It was 69.9 million shares. And so when we see a period of 17 days from January 13th through the 5th of February, where average trading volume, daily volume, is the 88 million, and the peak during that was 197 million, totaling 1.5 billion shares exchanged over 17 days. Does that not scream naked short selling to you?
Oh, absolutely. And but it also it's mathematically impossible for this to happen, except for the fact, and it's not just the naked part. That's important to focus on. It's short selling itself, but when you allow people to keep reselling these imaginary to make these loans, if I lend you a shovel, you've got my shovel. But I lend you stock, and you get a voting right, and you get a credit somewhere, but you don't really have my stock. You know what I mean? But so, in other words, it's mathematically impossible to have trading volumes like this, and what it's done, it's pumped in this infinite supply of shares that can get bought by somebody, you know, albeit at lower and lower prices. But so yes, this is a problem in itself. It's not. There's no way around it. It's not a mystery. Okay, the numbers are clear. They are what they are. So I think the real thing will be, well, what happens now when the meeting convenes? Okay, and it could be that people are even today feverishly working in their back room to try to cook the books, and deprive enough people of voting of their votes that you won't see them anymore. So that would be one thing. And so we'll see what happens when the annual meeting convenes. But if there aren't more shares present uh, as votes present than there are shares, I'll eat my hat. It's almost impossible to fix this, even in the darkest of dark rooms. So that's probably problem number one. The other thing that I would say, as I alluded to, this is getting, thanks to retail investors, it's getting attention. And so there've been some hearings. I was really happy with what Allison Lee did, and I'm very encouraged with Gary Gensler. Here's a man; he's a tremendous integrity. Not to say that our former commissioners didn't have integrity, but Gensler gets it. He's got a mathematical mind, and he understands systems. And for all these 40 years that I've been writing about this, people have kept their head in the sand, and they've been willfully blind or willfully unwilling to dig in to what they call proxy plumbing. I always thought plumbing is a good thing, But for 40 years, plumbing for us has been a bad thing. It hasn't been so good. And it's had a lot of smelly overflows, you know? So I do think that there's some momentum now at the SEC and from the public and even in the Congress a little bit. And so hopefully we'll see some progress made on this, which
I
will,
know, I know that you were talking about the significance and that he was pushing for a lot of this reformation back in 2008 as well. So he's been kind of championing this cause for quite some time, and that encouraged me when I heard him in the committee meeting just recently. It seemed like he was nailing these on the head, and the difference
yeah,
between what we've had versus what we need is that action.
yeah,
And so I'm at the point now where it's getting to where this community is growing so big that we're just a handshake away from Gary Gensler. I mean,
yeah,
we have the data, we have the numbers. This is what the people are wanting, or these answers. We're putting forth the evidence that this is happening. We have the experts like you and
right.
Dr. T. They're in the field, and Wes Christian. So I'm glad to see that you're excited about it, because I really do think that this is the time for change on this.
Well, let's hope so. And as I say, it's time, we need a good plumber. We never had a good plumber. And we actually did have most of our regulators, in my opinion. Don't forget, the biggest regulators, FINRA, they're they're the people, they're the regulated. They're made up of the very people who are being regulated and who are making millions of dollars in these deals. Okay. And so you can't imagine. I tried to explain it to them. They shut their ears. They're like willfully deaf, dumb, and blind to all this. So we need somebody who says, and I think this problem has become big enough that you can't ignore it. Talk about the elephant in the room. This is it, and you can't ignore this elephant anymore. As I said, I read you what the SEC knew this was wrong in 2009 when the Inspector General told them, but they did nothing about it. And fortunately, markets got a little quiet and it went away, but then it'll come back, and this is the way it will be. So, in any event, I thought I had asked you, make sure that I get my points across, which is how do we solve this? Okay, we need to figure out how to solve this, and the first thing is there needs to be a pre-reconciliation. People should never get a proxy unless they really are holders in due course, and people who are not should not be getting proxy materials. But it needs to be a valid, a legitimate reconciliation, and that's very hard to do. When you sell the same banana 158 million times and you only have 72 million bananas, it, you know, reconciling this is not an easy thing to do. Okay,
It's
so this
bananas.
doesn't really solve anything. It's sort of after the fact. You clean up, you throw something over it. So that's number one. The next thing, though, that can and should be done is to force lenders to recall their shares before the annual meeting record date comes along. And so that's where the mutual funds and the big pension funds come in. Uh, and they really do have a fiduciary duty to recall their shares so they can vote them themselves. There's no two ways about that. Okay. So that would help big time. Although again, the numbers are so big, it's like, I got to start a year in advance maybe to get my shares back. The other thing is, look, I feel that brokers, they should be prohibited from lending uh, shares that belong to individual investors without better disclosure. Okay, and so if full disclosure would be, oh, I can lend your shares and I can make a lot of money doing it anytime I want. And by the way, I owe you nothing and you can't protest. This is not ethical. It's not correct. Okay. So that needs to be done. People need to be told, no, you cannot be doing this. Maybe if somebody is stupid enough to say, yes, okay, I'll let you do this. Take my shares, take my votes, take the money to give me none. Well, God bless. But if you made decent disclosure, I don't think this will be lasting very long. Okay, but bear in mind this is a multi-billion-dollar source of revenue to banks and brokers and custodians and middlemen and and to mutual funds themselves. Okay, so the next thing is you basically, and Suzanne actually, Dr. T said, and I think this is what's going to happen in the eurozone, and that is we'll give you up to 5 days. You know, you're supposed to settle your debts here, settle your accounts where the debits and credits end up equal within 2 days of the trade. Well, all right, we'll cut you a little slack, but within 5 days of the trade, if there is short interest, it needs to be bought in, period. So that the debits equal the credits and the votes equal the shares outstanding. That's the only real solution, okay? Otherwise, people will continue to game this for another 60 years. So that's about it. And the last thing, and maybe I'm looking at the world through rose-colored glasses, but people like GameStop holders should keep on doing what they're doing. Realize their votes have value. Uh, Here, they had real value. This was a stock that was fast going down the tubes until they said, no, I don't believe all these things. And I don't think this is a company that is going down or should be going down the tubes. But they need to raise their voices and they need to um, um, speak up to the regulators, and they absolutely need, especially this year, to try to cast their votes. And when they don't cast their votes, to ask their intermediary and then to publish the crazy stories that they get back as to why they're not entitled to vote. When they paid their money and they're on the books as stockholders, why did they not get their vote? And if you keep it like that, I think we will force a solution.
Can I ask you a follow-up on that?
Yep.
Okay, because we have several foreign investors, non-U.S. investors that are holding, I mean, potentially millions of shares here, and the excuses, like you're saying, that what they're hearing from their brokers is, you know, you just have no involvement, or we don't have the voting rights for you, and so how can they go about either? Is there something where they can tell their brokers, like, I know I have voting rights and they can fight this, or how can we help them?
This is a very difficult thing to do because historically, foreign investors never voted their shares. Okay, and share ownership was actually individual share ownership was almost unheard of in a lot of Europe. You know, unless you were an oligarch, a multi-billionaire, a junior billionaire, it wasn't something that the average person was doing. Okay, but even when they did, they're getting their proxy materials in English. And guess what? I got email from people in Swedish, and my Swedish isn't good enough to read it anymore. Um, uh, so there's a problem with foreign investors. I say they need to go public. They need to get an answer from their broker or their financial intermediary in writing. But this is actually much harder, to be honest with you, than it would be for U.S. citizens, because what we barely understand it here. Over there, they don't understand it, and it's just not something that's percolated down to where you could even have a conversation with somebody.
Well, I am seeing, and I think a lot of people on the sub are seeing this start to change, because we
Yeah,
have posts on Reddit being translated into German that are then being, I've been tagged on German posts before because they're referenced, as I know several other people are as well. So it's definitely a transition. I think we're at a point where we are seeing that involvement. The sense of comfort I've had with it up to this point is treat everything equal, right? So if we had a percentage of people that were domestic that were voting, we still had a percentage back then of people that were non-domestic that weren't voting. So as the pie on the left has grown, the pie on the right has grown. We should still see a prevalent issue with the domestic vote,
yeah,
and the ability for these people overseas to be able to go public with that will help that. And I think the
yeah,
time
yeah.
is essential.
You know, you made a very, very good point here. that we didn't focus on enough. Okay, first I want to say two things, and then I'm going to quit. Okay, one is if you own shares, you are the owner. You have rights. You need to assert them, and failure to do that is really you're not doing right by yourself. Okay, but the second thing that you just touched on, come the end here, the power of social media. Okay, I've been writing these letters and they're all posted on the SEC website and nobody's ever reading them and no one's ever responding to them. But social media doesn't it doesn't go away. It can only grow. And I think if I was going to be optimistic, that would be the source of my optimism. That when you say, "Oh, we're putting the proxy statements in German and in Schweizerdeutsch or so whatever, so people can read them," this is a revolutionary development. And so I end up feeling optimistic at the end of the day.
Thank you for that response, Carl. I have one final question for you. I appreciate you going over time. I've just blown away by your experience, and I know people on this sub, we have so many people turning out to ask you questions continuously, and you'll probably still have referrals for answering questions even after this. I would fully expect that. But for the executives at GameStop that may be watching, what are some actions that they can take that are the best fit for them in terms of protecting investor rights and shareholder rights, if and when they start to see this blown up issue of overvoting occur? What are some of the best things they can do to kind of put the boot down, if you
Yeah.
will?
Yeah. Well, you know what? They do need to pay attention. They need to pay careful attention to the voting reports that come in. The first thing I looked at when I heard about this was who was the unlucky company that was going to be the proxy tabulator. I was afraid that it was somebody in, out of Mongolia was going to be counting these votes, but they have a very good tabulator. And a lot of these votes are going through well automated systems. And so people, they need to hire a good inspector. I'm sure they have one. They need to have a good inspector of election who won't be fooled, and then who will work like a demon to make sure that the reconciliation is appropriate, except piercing that veil is really still next to impossible to do, you know? So I would say to the management, pay attention to the election, respect your stockholders, read the mail and emails for people who feel they've been disenfranchised, and hopefully they'll realize that yes, many people are being disenfranchised. And who are they? They're their best customers, their best friends. So that's an injustice in itself, that we're letting hedge fund managers and speculators and gamblers run away with our electoral system at the expense of our customers and our boosters and the people who keep us alive as a company. So I say they got to toughen up.
I think they need to hire you.
Oh, no.
Yeah.
No way. No
Well,
way.
also, I got one final question for you. Sorry, I'm gonna hold you up for a minute. I know you and I talked about shorts covering, and the can is perpetually kicked down the road. But I mean, long story short, shorts have to cover.
Not really. Not really. But when you say they have to cover, when they have to cover, it's usually very easy. Some of them never covered because there wasn't a market. The stock got delisted. Its shares went under $2 or went under $1. And so they never covered. They just walked away laughing. So no, unfortunately, that's probably a good way to end. That's what happens if you don't have a well-regulated system. You get a bunch of criminals pushing down the price of a stock until it goes to zero and laughing all the way to the bank. Okay? So the evildoers go away with money and the loyal stockholders get ripped off. Unfortunately, I think a lot of GameStop holders were frightened out of the market and sold their shares at a loss, or what would have been a gain had they held on. So this is really a classic example of how unjust and how untenable these practices are.
Well, I am optimistic with the number of people that have held and have continued holding, and the pressure that's being put on them today. So we'll see what happens with this voter turnout, but I really do think that it's going to be a crucial point and the most consequential event that we've had so far.
Well,
So
do stay in touch, and if you want me
yeah,
to take questions, and you can send them to me, and I'll do my best to answer them. I hope I did pretty good. I tried to keep
oh,
it
you
at
did
a
great.
good
You did
level.
great. Thank you so much for your
All right. Well,
experience.
thank you. It's
We'll
cocktail
talk.
time here in sunny Florida.
Go
So,
for it.
bye,
Thank
everyone.
you, Carl. Have a
Okay.
good one.
Thank you.
Bye.
Okay, guys, that was pretty interesting. He definitely hasn't done the DD that we've done and seen and read. Mr. Carlsberg, I'm gonna call him. But not to say that he's not right. I mean, they don't have to cover on. There's different circumstances where they wouldn't have to. One being if they drove GME to bankruptcy and it got delisted, which kind of was their original plan, and they do this to companies. They short them, bad news, bad news, bad news, and sometimes it'll take a year or two for even it to play out. But then once the company goes bankrupt, they basically are able to keep all the profits, and their tax implications are maybe zero, or at least much less than it would be if they were just going along and basically reaping benefits from that. There was a couple other. So here's the guy. Let me see here real quick. This is the write-up on the whatever subreddit. This kind of explains him. Mr. Hagberg is considered to be one of the nation's leading experts on individual stock ownership programs. He has helped over 100 companies, including companies and government agencies in several Eastern European and Central Asian countries, to launch, improve, or remarket programs aimed at customers, employees, existing stockholders, and other affinity groups. He is also considered to be leading expert on the proxy voting process and has served as independent inspector of election, both in contested and uncontested situations, at over 300 annual and special meetings of shareholders. So this makes me think that either GME is hiring him, has hired him, or plans to, potentially, just based on their tweet that has the Carlsberg beer. It might be kind of cryptic trying to read into it. That might be insane, but I don't. That's kind of what I take from it. He also did mention that they need to have a good company that's counting the votes, and he said it seems like he's familiar with the company that's doing it, and that they do a good job, basically. So that's positive and good. There was one thing on our Discord too I wanted to share with you guys that was very interesting. It was actually someone's comment, and I don't know where it went, but it kind of it was on a Reddit. It cleared it up, and I think it's right. I'm looking for it. Jump on our Discord if you guys haven't. Where was it? I think I even put it in the chat. Yeah, basically it was kind of explaining, because to me I'm like, okay, well, how does it work if the vote comes in and there's more, like technically how does it work? I guess I'm kind of a technical guy. How does it work if there's more votes than there are basically shares, and what would be the process after that? Did I put it on here? Yeah, I think I did. But basically they said jeez, we just chat way too much on here. Basically it said the broker then would go back to those that were shorting it, and whoever was shorting it, and they would say, hey, we need your shares. There was a discrepancy and you need to get those shares. So at that point, then they would have to cover. That was my understanding, and it's somewhere on Reddit. Reddit's oblivion. It actually wasn't a very high voted subreddit or thread or whatever, because I hadn't seen it, and then I liked the I liked the comment in there. I was like, wow, that's legit. But yeah, that was pretty interesting. Not sure you need to get the part of the video and the little clips, Twitter, Reddit. He didn't understand our shorts have to cover question. I think he understood the question. I think he's been in it so long and for probably so many different scenarios where they got screwed and shorts didn't cover because the company went delisted or went bankrupt. So he's probably salty from the whole thing, a little bit. But I mean, shorts don't have to cover again if they go bankrupt. So I think that's kind of, yeah. I was talking about in general, but out of it, talking about now, yeah. I don't get enforced, right? In general, we're not letting GME go. Yeah, if we just keep holding, pretty much, the bankrupt company that no longer exists. Yep. This is going to the short covering is reflecting into the case in which shorts are run the game. Yeah, good luck bringing it to 0-4. I know. I'm holding a lot of weight, guys, on this, on this tweet. This right here. I'm holding a lot, not just this one, but all of their tweets. I mean, I already had conviction. I had this. I had that. But this is getting crazy and out of control and out of hand. Like, yeah, it's good to be diversified. And if people are like, oh, I've lost so much on GME, I'm going to put it into this. I'm like, what do you mean put it into that? You should be spread across a lot of different stuff. You should be diversified. But the confirmation that, and maybe it's not good to have that, but it's kind of insane what they're saying here. And it's kind of cryptic, of course, but not to us that have been reading about this for months and using these certain terms, you know, the MOAS and all the, I mean, this and the Carl. So here's the tweet. This is why I streamed the AMA today, because Carlsberg, they left the beer in here. Why would they do that? I mean, maybe it's total coincidence, but they did edit it because they have GS for GameStop right here. So between this tweet and their responses on different stuff is just, and also, okay, I was gonna save all this for the video, but I guess we'll just stream it since you guys are here. I'll probably mention on the video too, but their tweets, most of their tweets come through a company that basically a third-party company they use to send out tweets, and then it's approved or however it works. But some of these tweets are actually sent out from an iPhone, and I'm not sure how you can see it. Embed tweet, me tweet. I don't know. I'm new to Twitter, honestly. But these ones, all these ones that have crazy messages are from an iPhone. So DFV, Ryan Cohen, you know, I don't know who it is, but it's not from the program or third party they're using to send tweets. So basically, they tweeted out this, the program, the company did, and then he's like editing them with just like little clues and little breadcrumbs here and there. It's crazy. It is truly crazy. And then what do we have? Jeez. Oh man. Well, that was pretty cool. Let's see what after hours are doing real quick. Yeah, just barcoding. No doubt. That's crazy. I actually haven't watched it after hours. I saw pictures of it, like the shorts, the barcode of the shorts. I haven't seen it though. Thanks so much, guys. First live stream. If it wasn't live, just sub up, like up, comment down either way, and catch us on the next video. I don't know, maybe we'll do another live stream at some point. When I'm trading and when this thing's squeezing, it'll probably be difficult, but we'll see. Thanks for watching, guys. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at Happy Money YT. And then Carl Hagberg loves play. Nice. She's the other one that they did the AMA with. And then on our Discord, jump on there. The link is in the description. And yeah, I'll be coming with a recap video shortly. Thanks, guys. We will see you soon. Peace